What do CCB's results then tell us about the health of China's big state lenders?
Well, it's been a tough go in 2020, obviously, for the big state lenders because, as we know, these policy banks, they do well and get alleged favorable treatment on policy when things are going well, and then they're not so great when the economy is going bad because the Chinese government, of course, earlier this year basically enlisted these state-owned banks to support the economy through the pandemic, asking them to lower their interest rates to struggling businesses and rolling over bad debts. Well, what's happened is there's been a pileup of bad debts. So while we might be seeing a turn in the corner because the Chinese economy has been recovering, the government and the regulator is starting to ease pressure on those banks, and generally we should start seeing better but not stellar results in these third quarter results than in the second quarter. And that's what we're starting to see with the first big bank to report late yesterday. That's China Construction Bank, the number 2 lender. The first of the 4 big to report. It reported a 4.1% fall in third quarter profit, but credit losses continued to rise amid, of course, the fallout from the pandemic. Loan loss provisions, they grew 42% year over year. Non-performing loans rose 20% from the end of 2019 through September. So now, as we're starting to see them turn the corner, the big deal is how do you pay the piper, if you will, on these bad loans and rectify that.
Steve, we'll get a better indication, as you alluded to there. So we're done with Construction Bank. ICBC is coming out today along with the other big ones. What are we expecting?
I mean, similar stories for these other banks, ICBC, Ag Bank, Bank of China, BOCOM. Bad loans at ICBC, problem loans rising 12.4% in the first half. Ag Bank, bad loans jumping 11% in the first half. Bank of China, problem loans outside of China. So this kind of gives an indication of the breadth of their lending. So outside China, Hong Kong, Taiwan, and Macau, problem loans at Bank of China rose 182% in the first half of 2020. Bad loans in the greater China market rising 16%, outpacing a rise of 6.7% on the mainland. So they got these bad loans that they have to deal with. But again, because policy is starting to ease from the China banking and insurance regulator, we're going to start seeing perhaps some recovery, and included in the stock prices of these banks, because they've been absolutely battered. And some say maybe they're, a better valuation right now. And some analysts expect healthy returns, or earnings, I should say, over the next 2 to 3 quarters, propelling shares considerably higher. CICC analyst says at least 60% higher for these battered bank shares.